Hi, welcome to this video. It's Sunday, it's the 19th of September. This video we're going to be looking at some of our favourite types of trade setup to get really good risk to reward trading opportunities. Now, in terms of the markets in the week ahead, it should be an active and volatile week with the Federal Reserve meeting being the major event of the week. Now, we've got 12 pairs that I want to look at. So what we're going to do is we're going to go over and take a look at all the charts. Just before we go and take a look at the charts, just keep in mind, it is my view as of this specific moment in time. It can obviously change in line with the market action and conditions. If you want to learn all our trading techniques and strategy and check out our daily technical sentiment analysis of 14 FX pairs, if you go below the video and click the link, you can get live access to our member center. You can also check out our Facebook group of traders, follow our Facebook page, and finally check out our Recommended Regulated ECN broker. Right, let's go and take a look at the charts. Right, so we're on our first pair, Euro USD. Regular viewers will know we've been bearish of this pair for months and got a short trade in back in June. Just above the 122 level, followed it down, got stopped out on the move above 118 and re-entered when we failed to take out the 119 level. Now, in terms of this trade, it came in at 118.60, so just let it come off the 118 level. What we liked about the setup was the rally here simply came up to where the rally failed before 119, a big level on the longer term charts as well. No more buyers, and then we're off to the downside. It's only about 140 pips so far, but I think there's a lot of downside potential in this one. I think we're going to go down to 110 longer term. Now, in terms of for new viewers, when we do our technicals, we keep them simple. We always get a directional bias from the fundamentals and sentiment, and the fundamentals are out and out bearish for the euro. And in terms of the fundamentals, the big fundamental is the central bank. I just want to show you a chart. They are printing money, and if you do stimulus and print a lot of money, that's obviously bearish for your currency. And the ECB are printing more money relative to GDP than the Fed. And you can see the takeoff in their stimulus here, just rapidly increasing it. A lot of people are saying they're going to cut it back. Said this before, they will not be cutting it back. They cannot afford to do so because the zone is in such bad state, or a bad state. I just want to show you long-term GDP or growth for Eurozone. Predictions just collapsing, okay? The zone, you read a lot in the media about how great it's doing. It's not, okay? You have some countries doing well, Netherlands, Germany, Austria, etc. And then the poor nations of the south are just totally wrecked. They cannot do without ECB stimulus. It's going to get a lot worse in Eurozone, so the euro will be going down despite the big fall, okay? You've got speculators who are still long the euro. So I think those speculators are going to come out the market and drive the euro lower. Rallies back to 118 are selling opportunities or take a break of the lows. If we look at the monthly chart, you can see we're just at the 20-month moving average, just above it. If that breaks, 110 is fair value for the euro. I think in this pair we have had, wrong page. We have had fairly low volatility, but I think it will pick up soon and we'll get a nice smooth trend to the downside. Terms of this pair, just limited upside and a lot of downside. Right, let's go and look at our next pair, which is going to be USD CAD. So USD CAD. Now, in terms of USD CAD, it's been one of our favourite pairs for a good few months. Regular viewers of videos will know that came really interested in it, but it kind of bottomed out, or double bottomed at the 120 level. We've had several long trades in it. It's done pretty well. And we're looking for more upside. I'm looking for 130, then 134. So potentially 600 more pips on the upside. Now, in terms of another good way to get into trades is when you get sideways action. Wait for a strong breakout from the range, okay? And in terms of the USD, the pair was travelling sideways here. Crude oil was going up, okay? But crude oil, strong rise to the upside, giving the CAD no help at all. You did see a little poke down there through the round number, 126. No more sellers back up. Another poke at 126. No more sellers. And then bang, she breaks the 127 level. So I would say, yeah, if you are wanting to get in USD CAD, I would just basically buy. Okay. I think the 127 level will provide support. If we go through this 128 round number, you can see where our stop is, 125.70, back behind the next round number. I'll bring it up here. Okay, so you might want to wait for a break of 128, but it looks really bullish at the moment. See 4 nice months to the upside. There's the 20-month moving average 130 level. I think we'll get there. And then basically just a little bit higher. Well, I say a little bit higher, 400 pips higher, up to the 134 levels. This bunch of candles here. Okay. Oh yeah. Also in relation to USD CAD, you have got election risks because the election are very close in Canada, hung parliament, and that could be an eventuality or a high odds probability. That would not be good for the CAD. Crude oil had a big rise. I won't show you the chart, but I think it's going to come down. Have a big fall. I've posted on my Facebook page on that. If crude oil does fall hard, that's going to give the USD an additional boost to the upside. Right, next pair is going to be NZD USD. I did a video on this one. And one trade setup we'd always look out for is if you get a really strong rise on high volatility that moves from Bollinger Band, or one outer Bollinger Band, to the other. If the volatility is really high, okay, we would normally look, if a candle went outside the Bollinger Band, to sell back within the band, or if we can't get outside the band, just come off the band, okay, if that makes sense. You watched the full video I did on this. I think I did it about 10 days ago. We basically come in, aggressive entry here, travel sideways. You see these tails trying to get up and then down. Now, in terms when you see a big rise like the NZD, in this instance, you want to look at why it occurred. Why did it occur? Because people were saying the Royal Bank of New Zealand is going to raise rates by 0.5%. That's now priced in. I do not think they're going to do that. If you look at the big picture for commodity currencies, I think it's bearish, okay? Global growth is slowing. That means that's bearish for any commodity currency, okay? So it's not too much profit in this one yet, just under 100 pips, but I'm hoping we can follow through to the downside. If we do, we'll just pop the stop behind 71. Moment rallies back to the round number, selling opportunities, okay? I think we'll get a chart lows, and then we should, I think, longer term, go on, or I'm hoping we're going to go on to monthly support at 65. Next pair I want to look at is USD ZAR. USD ZAR. Now, in terms of, from our perspective, if we're bullish of a currency, okay, looking for a turn, we want to find the currency that has moved the most against the one we're bullish of, okay? This pair, USD ZAR, that move there, the ZAR pushing the USD down over 9%, okay? So, yeah, from our perspective, we want to have a go at this pair. If we get the turn, we're probably going to get a bigger rebound here than in other pairs, okay? Now, in terms of you're looking for turning points, we tend to be quite aggressive. So we come down here. I thought we are going to go up on this candle here. We don't. I get stopped out, okay? But then came back in just above the 1420 level. We did dip beneath it. Then you get the big blue, and then we're off, okay? Still plenty of upside in this pair. So very often when we're looking for turns, we get the first trade wrong, okay? But yeah, if you're aggressive, you can use a fairly tight stop, okay? Got our loss back and a bit more, so I'm hoping we're going to see a really good run in this pair. Now, if you want to come in fresh, you can come off the 1460 level, okay? Or wait for a breakout above 1480. If you wait for a breakout above 1480, you'll stop behind first level support. If you come off 1460, stop behind second level support. It is a commodity currency. It's an emerging market currency. I just think the dollar's got way more upside to chart highs. And you can see my next level is monthly resistance at 16. So somewhere where my cursor is here at the top of the screen. So always look at the lesser looked at pairs. The kind of exotics or emerging markets. They're the ones that move really, really quickly. Okay, so they offer really good opportunities for profit. Right, let's just look at a few more USD pairs, and then we'll go on to some crosses. So we're on USD NOK now. In terms of last week, I did a video on the euro. I featured this pair, and say it frequently in our videos. If you're bearish of the euro, sell the euro correlated currencies because they very often move quicker than the euro. Okay, so you enhance your profit potential. Now this pair is actually also a commodity currency as well. NOK heavily correlated with crude oil. Now, in terms of its correlation with crude oil, it's far bigger with the NOK than it is with the CAD. Oil is just the all-important industry, obviously, in Norway. Now, in terms of this pair, we did try a long, and we got stopped out basically on the move through 860. Took the move back through 860, and then we got a nice move to the upside. So we get a loss back. Hopefully now we'll get some profit from this one. If we open new high, I think it's a buy. And I bring my stop up behind this first level support. Okay, plenty of upside potential. If we dip back, you come off this level, put your stop behind this level. Hoping we're going to follow on though. Okay, so we'll see how this one goes. But plenty of upside potential. We think the euro's going down. We think crude oil is going down as well. We think the USD, after its recent correction, firm up when the Fed comes around on Thursday. We don't see them being more dovish than the market expects. So yeah, we'll see how this one goes. I also looked at USD PLN last week as well. Now, in terms of this trade setup, that was a big fall there. It's a volatile pair, outer Bollinger Band to outer Bollinger Band, based on relatively high volatility. We get outside the band, we're just going to buy back within the band and above 380. That worked out quite well. Now, last week, I was saying, if you get a move through the 20-day moving average, I think that's a buy. We do go through the 20-day moving average on Monday. We come back a bit, then we get three nice blues to the upside. Okay, still a lot more potential upside in this one, and I'm going to put a level of support here on Monday. Actually, I think I'm giving it a bit too much room. So first level of support will be there. Second will be here. This one will go. So you could buy back to this level of support when I draw it in, of course. And basically have your stop behind this one. We're looking for a break of chart highs, then a move off the top of the computer screen to 420. So I think after the correction, this is now really gaining a head of steam to the upside. Pullbacks are buying opportunities. So yeah, proxies always worth looking at. Last USD pair I'm going to look at, USD MXM. This is a pair set up similar to the USD CAD. Full back, sideways action, and then you get the breakout. If that breakout follows through on Monday, I think it's a buy, and we could be heading for 2060, then maybe even up to 21. This pair has a history of having like big spiky moves or not doing much at all. I'm hoping for a big spiky move to the upside. Obviously, a commodity emerging market currency. We're bearish of the emerging markets and commodity currencies. So that's enough USD pairs. So let's go and take a look at some crosses. Right, this pair is NZD JPY. Now, in terms of this, very similar to USD JPY, the NZD goes on a real tear to the upside, pokes at the outer Bollinger Band, then we come off a bit. We wait to come in through the 78 level here. I'll try and get back up, a higher fail, choppy price action, but down. Not much out of this pair yet. I view it as a sell, going back to chart lows. And long term, I'm looking for a move to 70. Okay. Now, in terms of both USD and JPY, I'm looking for a bit of caution to come in the markets. Yeah, we did have some stock market selling last week. If that follows through next week, create a bit of risk off. Both the yen and the dollar will do well. But the NZD just overextended to the upside. And I think, yeah, decent downside potential in this one. I'm going to look at a pair that hasn't been too kind to me over the last few months, which is JPY. This candle here, I like it. It comes up, hits the 87 level, the 20-day moving average, straight down to the next round number. Okay, so if we take out 86, I think we're going a long way to the downside. 84, then 82. Any rallies back towards 87, I think will fail. Okay, so yeah, I think this one hopefully we'll get a decent trade out of it. Where do I want to go to next? I am going to go to GPNZD, which I featured in my NZD video, as well as that NZD, JPY, and NZD USD. This one we fancied coming through the 194 level. Yeah, it's been very choppy and messy. It's only a minor profit at the moment. This level of support here, I'm looking for it to hold. Okay, so if we come back, key off that level on strength, or if we get through this 20-day moving average and clear of these tails again here, I think it's a buy. And plenty of upside potential, 197 and up to 2. Now, in terms of, yeah, it's about risk off. Yeah, pound, I think, is just undervalued anyway against all the commodity currencies. If we do get risk off, it will do better than any of the other commodity currencies, and obviously the NZD. So yeah, looking for this one to hopefully firm up and go back to chart highs. Where do I go next to? My last pair. It's not a pair I normally look at. It's going to be AUD NZD. In terms of the AUD, that is a really big downtrend. Now, what I like about this pair is there's a big speculative short position on COT net traders positions, which is our favorite sentiment tool. So I think there's limited downside in this pair now. I think the speculators are going to get run on stop. This little tail here, I think, is exhaustion. I came in a bit early, actually, and we came back down. You see my level, 103.50, but I'll add above this level, and then hopefully the specs will get run up to 105, then possibly on to 106. Now, I don't normally look at this pair. Yeah, normally pretty boring. The volatility is low, but I just feel that the risk reward on this is really, really good. Big speculative position in this pair, biggest for a good few years, as far as I'm aware. So yeah, looking for the specs to get run on stop. We shall see. Right, that is the video for today. Perhaps do a video before the Fed and see how the markets are shaping up. But for now, that's it for today. Thanks for watching the video. Take care. Have a good day.